All right, you guys ready to go? All right, who's ready? Yeah. Yeah. So nice to have a picture of my mom up on YouTube. It's really cool. I don't know where they got that, but that's good. So without further ado, welcome to Forex.Today, the YouTube community of a bajillion foreign exchange traders. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Hey, my name is Wayne McDonald. I'm a currency trader just like you. I have about 20 years of experience. That's cool. I have a passion for technical analysis and a panache for fundamental analysis. So why don't we just combine them together and put together some trade plans? Coolio. In many cases on the dollar pairs, we're hitting reversal areas and well, the market's reacting anyways. Yens have already blown through, but they're going to be impacted nonetheless. So very, very, very interesting stuff. So if you got burning questions, I will give you the logical ointment, so to speak. So ask them here, and I will do my best to address them. I'd also like you to visit tradersway.com and open up a demo account. Why not? Why not? Well, I think you should, because one day you're going to need a broker that you trust. Traders Way earned my loyalty and respect long ago during the Swiss National Bank debacle that put many foreign exchange brokers out of business because, I don't know, I think they were doing things like trading against their clients. Well, Traders Way wasn't affected because they don't do those things. And I said, aha! There we go. That's what I'm looking for, baby. So anyways, visit tradersway.com, open up a demo account. Demo says, hey, the demo trader says, what happened to Bitcoin? What, it hit all-time high. What, right? ATH, what more do you need? So anyways, visit tradersway.com, open up a demo account. Yeah, you can trade Bitcoin there, gold, oil, nat gas if you need. Cool. Of course, all dollar pairs and yen pairs, but in exotics. And here's the real cool thing. If you look at the swap that Traders Way pays you on the exotic pairs, they're very, very, very good. You're like, ooh, nice. Cool. So tradersway.com. Let's go. Get on with it. Okay. There's a humming somewhere in my office. I don't know what's going on now. Maybe time to reboot the old Windows box, huh? I don't know. All right, so anyways, guten Morgen. Celebrate you like a should. All right, yen. Oh my God, yen strength. Oh no, stop it. Stop it. Okay. Dollar strength. Oh my God. Look at that. They double bottom. Isn't that interesting as an indice? Swissy strong, dollar strong, yen strong. Full stop, y'all. Pound still decent. Kiwi still aight. Aussie came down hard. Euro hasn't been going anywhere anyway. So I think in a lot of situations, it's time to go cautious maybe. Cool. You got to know when to hold them, know when to fold them. I might be throwing some hands away in the next couple of deals. It's all right. It's all right. I'm still in the game, bro. Okay. All right, cool. So let's take a look. Let's start with commodities. And let's start with Bitcoin. Okay. Cool, man. Look at that. We hit the number. What number? Isn't it amazing how some people don't know things like this? Isn't it? So here in the first 4 hours of the month, of the week, we have a target here of 67,000. Hang on. Let me adjust the chart. 66,977.60 in the first 4 hours of the trading week. Look how accurate that is. Oh my gosh. That's crazy. And then there are some traders that don't know these things. Well, I guess I'm supposed to have empathy for them, but I don't. But amazing though, right? Like, oh my God, Becky. Oh my God, Becky. Look at that, right? Look at those pips. Crazy. 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 That's crazy. Hope says, hey, your Confluence template works exceptionally on Ethereum. Oh. Cool. Yeah. Right on. Right on, Hope. Nice. Nice. Ethereum Classic. What the hell? Anyways, cool. Oil still kind of farting around, making its way up slowly but surely. What's up, Abacus? What's up, Abby? Gold, okay, bounced off the buy zone and is just farting around. Remember, gold is slow. Gold is slow. But everything seems to be working. Look at Brent climbing, riding the daily, right? Riding the daily 5, which is very similar to riding the 4-hour 21, which is very similar to, check this out, back it out. Cool. So everything's just kind of doing its thing. I'm trying to get a feel for whether we have a change in trend coming or if it's profit taking. So that's the big decision for the day. And I might have to take a break. It might be Far Cry 6 day. I said it yesterday or the day before that we might be getting close to that where I just take a day and let it do what it needs to do and then come back when it comes, when the market conditions change again. Why do these glitches in the data happen on TradingView charts? I don't know anything about TradingView charts, sorry. So, we were talking about a failure to breach a higher high is technically important. And if that is then followed up by a lower low, I walk. And in many of these yen trades, I was kind of thinking about it. This year I got caught in sort of a strategic management change. I don't need to get into why, but I decided not to build a portfolio, but instead, eke out a living more swingish versus putting 100 trades on. And there's various reasons, but it doesn't matter. But now I kind of am reminded that I do better the other way, right? And so whatever. So now it's interesting because if you have two portfolios, for example, one is your long-term long and the other one is your shorter-term long. Like let's say you have two accounts. One is long-term long and the other one is medium-term long. Okay? So you're not strategically doing different things. You're not like hedging, like one isn't short and the other one's long. The difference is risk management and really profit taking. Not even, it's somewhat risk management. There's different kind of techniques, but generally the risk management is not a whole lot different, but the profit taking is different and the re-entering is different. And so it's kind of that risk where, you're on trades that are 300 pips and you might have to watch them come down to 100 pips profit and then back up to 500 pips. And this move here is risk, right? Because it's money in the bank, but you're right because you got floating profit and loss, but you didn't take it. So it's really, I don't know, like opportunity cost if you think of it that way. And so the decision is, do you take the 300 pips profit or do you suffer the pullback of 200 pips and then build back up, right? And meanwhile, add another one here and then have it come down and then and once again, opportunity cost and then rebuild versus take profit, add, take profit, add, right? That kind of stuff, right? And by take profit, usually what happens, or if not always, you have stops in here. So you're up 300 and then you cash out of that and rebuild. And this year was sort of more of the more actively managed versus passively managed. And I look at it like the passive was better. So it's not really sort of, I don't feel bad about it. It's more of a reminder, right? Okay. More of a reminder. Yeah. So anyways, so I look at this because if you're in the shorter run, right? In the shorter run, if you have, some trades in here versus down here, this hasn't changed any much, but you might have lost 3 or 4 trades in here that were open and profitable, and you might have even taken one loss, right? And let's say 3 profit and 1 loss, but now you're out and now you have less opportunity, where really on the long passive, like nothing's changed, right? Right? You're like, oh, really? There was a pullback yesterday? Really? Where? Let me take a look, right? And that's sort of the difference, right? So anyways, looking at this, on the 4-hour, technically, the trend has not changed. Now, except for the rate of change, if you will. So if you were going to look at this, let's say, only through the lens of a 4-hour and daily chart, okay, you might have this trapped as more of a sideways movement, right? You look at it like this, a pullback like this, and right now we're still on the 21, okay? And you'll see that this is a little bit concerning. And you might remember yesterday we looked at Euro Yen, and Euro Yen was screaming that this might happen. So the fact that it's now happening on a CAD, which is one of the mediocre trades, because CAD's been weak a little bit the last few days, and there's been other stronger ones, but we can look at Kiwi, and the Kiwi had a dramatic day as well. But when you put it in the context of 4-hour and daily, which kind of backs you out into bigger day trades and swing trades, right? This may be technically interesting, but it may resume, because this pattern here would be range trading, right? And then maybe the fundamentals take over here. The concern is, are we regressing back to the 55? And so there's this awkward moment that we're in now, that this is important, and you still may need to be brave, but not. Okay? So I'm probably going neutral in here, where some trades got knocked out, and I'm not, I might not add. So I might play Far Cry 6 today and smoke a cigar and clean my office. Right? Okay. Okay. Cool. Demo trader, just dump your broker. Okay. Simple enough. All right. All right. So cool. This is interesting. Interesting, as some might say. Interesting. Yeah. Okay, cool. So, yeah. Let's look at the euro, because look at that. This is what I was saying before. The euro was the only one saying that this could happen. And I remember in the day trading group last night saying, look, if euro bails, it's going to fall probably the hardest, because it's the least strong, right? So it can't defend itself against yen. But also, you guys might remember multiple days ago, we talked about this leading to that, and therefore we need to be cautious. And this could be the big change in trend. And it could be like, so yesterday we were like this, and now I'm like this. This could be very, very, very important. And it may impact what I do the rest of the week. Okay? Right? There's a lot changing here technically. Fundamentally, nothing's changed. Okay? So I got to keep an eye on this. Today's going to be important, because if today in New York we sort of recover and head back up, then there's a glimmer of hope. Sort of like that scene from Dumb and Dumber when he says, what's my chance? What's the chance of a guy like me being with a girl like you? And she says, 1 in a million. And he's like, yes! So I got a chance, right? This is sort of like that 1 in a million shot. Like, yeah, but if we're down here, I'm folding my cards. I don't care if I have 2 jacks. I'm folding the cards. Okay? Actually, the funny part of that scene, because he ad-libs, right? He says, what's the chance of a girl like me being with a guy like you? Which is really funny. I mean, he's a funny dude. So anyways, like, oh my gosh, we're right on the line. Here's what I'll do. Like, here's my sort of plan B. Let her come down and then bring her back up, right? So, cool. I mean, just whatever. So I'm in cautious mode today. So you're saying there's a chance? Yeah, I don't actually like the movie. And whatever. He's funny, though. So like they're all exhibiting kind of the same thing, like, right? Like what was the message I shared with you guys? Was it just yesterday? I said, who sells highs? Losers. Loser. Okay? Who sells double tops? Bears. So now a bear shows up. Now I have a real reason to be frightened. So in the day trading group, we were working quite a bit recently on psychology. And I'm like, well, don't be worried about it until you have evidence that there's something to worry about. Otherwise, you're just creating worries. Okay? You won't go hunting because you're afraid there's a tiger in the grass. But there's, right? But anyways, okay. So now we got something like this to worry about. Now we got it. Now, look, now congratulations. Congratulations. You got the thing you want to worry about. Great. Great. Good. Good. Now worry about it. Okay. I didn't say fear it. It's more like do your job. Where's the next buy zone? Yep. Okay. Maybe she comes back down to $1.56 and we buy it up. $1.55. By buck, I mean 155, right? 155, 156. We're 157 and a half. It could have a small pullback. That's all right. That's great. Good. Fine. Markets turn cautious. I don't know about that. I don't know. Maybe. Okay. But we are on the November sell price. So, like if you were an analyst, you'd say, well, that's where bears are going to live, and this is where bulls are going to re-enter. Okay? There's that price for re-entry. There's this price for re-entry. Look, I just predicted the future. Cool. So, one would stink like this. Okay? Cool. Great. Fine. Great. Okay. Great. It's higher than I predicted. Remember, we were talking a million years ago. Look at this. What was the top of the month? M3. What was the top of the month? Central pivot. What is the top of the month? Okay, M3. So bearish, right? What's the top of the month? M3. What's the top of this month? R2. What's the top of this month? M3. What's the top of this month? M4. Okay, cool. So this is March. What did I predict the top would be for October back in March or April or May? You can see like the best month we've had was May. By the way, this is the exit. There's a great exit in there. I guess, is that May or is it June? I don't know. But anyways, check that out. The best we've ever seen was R2. So what did we predict way back in March would be the top for October? R3. And what I'm trying to show you is in March, we didn't even come, What I'm trying to show you, and I don't know what I just clicked, so let me reset this. Where were we? We were here. What I was trying to show you is in March, in April, in May, and June, and July, and August, and September, we'd never even got close to R3. Not even remotely close. In fact, we only hit R2 once in the period from March and April and May and June and July and August and September. But some idiot from Canada says, oh, well, in October, we're going to R3, maybe beyond. Here's R3, baby. Beyond. Oh, my God. Amazing, right? So is it time for maybe some profit taking? Yeah, sure. Has anything fundamentally changed? Well, let me ask you, what has changed? Did anything change last night? Right? Oh, well, we're worried about China expansion. Oh, we already knew that. We're worried about COVID. We already were worried about COVID. Oh, well, earnings in the stock market. Yeah, well, you weren't worried about that 3 days ago, but now you are. Well, what about the Fed taper? We already know when that is. What's the debate? When they're going to raise interest rates, whether it's 2023 or 2024. Yeah, well, we're going to be debating that in 2 months from now, so that hasn't changed. Like, what's changed? Nothing. Cool. So does it mean down? It doesn't mean down. Now, right? So strategically, fundamentally, I say, well, good, nothing's changed. So now I zoom back in and go into a smaller time frame, and now I'm an analyst. Okay? A technical analyst, not a strategic planner. I'm not talking about portfolio construction or investment thesis. I'm just now a technical analyst. And what does this say? Well, I can cautiously basically observe. I don't even know if I would buy this. I might not. But I need to really pay attention to this because I could still buy it here if I want, but here I won't. So I'm right on the precipice. Like a porpoise with a purpose on the precipice. Or is it a platypus? I don't know. Okay? So if we're down here, I'm out for a while. Cool. Nice. But if we're here, I'm in for a while. I'm in for the long haul. Down here, I'm out. I have a very strong opinion. My opinion will not change. You understand that? My opinion will not change. My behavior will change if market conditions change. That is different, right? So you have a strong opinion, but weak conviction. Which means if we start doing this, my opinion hasn't changed, but my conviction for buying dips is dead. Okay? I do not buy lower lows. I do not buy lows. I buy higher lows. So, right? The question we're being tested right now is, do you have the patience and the discipline? 95% don't. Do you? Oh, because you're special, remember? Yeah, I saw that, Robin. Yeah, no, I saw that too. Yeah. Okay, right? Remember, you think you're special. You're unique. Everyone else is the same, but you're special and unique, right? I mean, that's how you feel, right? So you're the one with the patience and the discipline, right? But that means you have to exhibit it. Okay? I know you think you're special and unique because we all know 95% of retail traders end up losing their money. But you keep doing it anyways because you're not the 95%. You're the 5% that's special. Cool. So under duress, you will do the right thing. Correct? Good. And I know it's true. You will do the right thing. You can and you will be patient and disciplined. Okay? You guys agree? You can and you will be patient and disciplined. Beckery says, hey, in my humble opinion, right? A bigger structural pullback would be healthy. Yeah, it's fine. Okay? The question is like, can you make money in this mode? And can you preserve your capital in this mode. Missing in action says, hey, my mom said I was special, right? Okay, your mom said you were special. And then the teachers at school said you were special. Which is good. Your stepdad told you were a loser and you would not amount to anything, but hopefully your mom and teachers at school told you you could, right? Now, here's the interesting thing. They kind of ruined us. You know, when you got an award, remember when you got a ribbon for coming in 8th place? That's a problem, isn't it? So here's the thing. The teacher comes up, tells you to come to the front of the class, and she says, oh, you're so smart. You're so smart. You figured it out. You're so smart. Okay? And we are trained to find our love, our dopamine, whatever it is, through this sort of training that we've had, that you're being rewarded for looking smart. Not that you are smart, that you're just, your teacher said you were smart, and then the next person, oh, you're so special and smart, and everyone is special and smart. But here's the problem. They're rewarding you for making it complicated. And I think it's one of the things that we fight as a trader. Look, you buy low, you sell high. It's not complicated. But we love to make it complicated. Okay? We love to make this 10 times more complicated than it really is. Because that's how we get rewarded. Oh, you're so smart, you're a currency trader. Well, let me show you how complicated it is that what I do is. Have you guys ever found yourself doing that? When someone's like, oh, you're a currency trader? And the first thing you say is, let me tell you how complicated it is to be a foreign exchange trader. Okay? And you're like, I know all these patterns and I have to think about central banks and money flowing around the world. Oh, most people certainly can't do it. 95% of traders lose, but this is what I do. Like, look, man, I'm guilty of it too. But all we're trying to do is say, will you please help me have a dopamine release? Because I can do it, but you can't. Because I'm so smart. So why don't you please tell me I'm so smart? But this is a danger, because then we want to reinforce this narrative to ourselves. Then we open up our charts and make it 10 times more complicated than it really needs to be. Like, oh, dang it, buy the dip or not buy the dip. It's not hard, but you're making it 10 times more difficult than it needs to be. Okay? Right? Narcissism. Yeah, well, I don't take it as far as narcissism, because I think we've been trained that way. Okay? Like in Japan, for example, and correct me if I'm wrong, but in Japan, they focus like, well, let's just say it's different. I'm just going to leave it at that. It's different. The thought process is not the same. Okay? So there's a cultural effect to this. Okay? Yeah, it's not clinical narcissism, but we've been trained culturally to think this way. And in other cultures, it is different. It might be somewhat the same. It could be completely the opposite and all that kind of stuff, right? Like in some cultures, maybe a socialist pig dog cultures, they're like, why do you need to be smart? You should not be smart. Being smart is bad. There are some cultures where being smart is looked down upon. or a personal ego. Let's say they're like, oh, you're bad because you're rich. Well, that's bullshit too. Okay. So, we got to be careful because it's our bigger culture, our smaller cultures, it's global cultures, like all these things impact. We've been trained, if you will. I don't think it's pure human, the human species and human experience. I think a lot of it is cultural. So I'm kind of talking through my experience where I constantly focus on trying to maintain simplicity. Okay. And then I'll make a joke here. I'll say, so to do that, you have to put the ego to the side. The way you find simplicity is to remove the ego. And here's the joke. So when I was a venture capitalist, one of the things I always looked for in patent designs, if I was going to invest, would be simplicity. Now that's the joke because now I'm appealing to the ego. I'm bragging about being a venture capitalist. And I know people like that. And they're like, oh, well, you was a venture capitalist. So anyways, so you have to be able to laugh at yourself as well. It's part of who we are. But as long as you're conscious of, I don't know, the bias, if you will, because it's a bias to make it complicated, right? Then at least you can address it. If you're not aware of what you're doing, then you're certainly not going to improve. Okay? Right on, Manus. Yeah, demo trader. Yeah, I think most of you guys are. So the question here was, was I part of the 95% when I started? I think I was probably in the bottom 10%. Like, I think some of you guys are coming to the Forex market and you know a lot more than I did when I became a trader. I really, honestly, I absolutely knew nothing about being a trader. And I think some of you guys have probably traded stocks and you did this and you did that. And then you found some Forex. You're like, oh, I'll try this Forex thing. But I didn't know anything about Forex. In fact, nobody knew anything about Forex. But I didn't know anything about trading or even really investing because being a VC, you don't look at buying stock, right? Only a loser would buy stock because you're as a venture capitalist, you're buying something for a penny and with the hope of one day selling it for $100, right? So why would I be the guy buying it for $100? You have to understand, like, I literally frowned upon it. Then I ran into wealth managers. And I look at these guys and I'm like, whatever. It's like fake. It's like being a fake trader. But I look at them and I'm like, oh my God, they make really good money, and I don't think they're actually doing anything. And so I got really intrigued. Like, this mediocrity is producing $300,000 or $400,000 a year, maybe even $1 million a year, and they're mediocre. And what do they do again? They manage wealthy people's money. By doing what? Oh, they buy mutual funds. Wait, what? They're earning $1 million a year to buy a mutual fund for wealthy people who could just buy the mutual fund themselves? Yeah. Like, well, what the hell is that? That's a job. So I started looking at that and I'm like, oh my God, look at these guys, right? So I remember that piqued my interest because I know to make that kind of money is a tough gig, man. You got to be razor sharp to make that kind of money with a job. And I'm like, these guys are crazy. So then I was reading how this young guy, he wasn't an investor anymore. Like, I'm not talking about wealth managers anymore. Again, buying mutual funds for rich people who could just buy the mutual fund themselves. And then I'm like, well, why would they need this guy, this wealth manager? Anyways, Then I'm reading about a trader. And I'd watched Wall Street as a kid and all that, but I didn't know that was merger arbitrage. I just thought it was kind of interesting, a little bit entrepreneurial if you're going to be buying stocks and beating the market, right? I thought, well, that's kind of an entrepreneur, and I'm an entrepreneur, right? Buying the market isn't necessarily entrepreneurial, but beating the market is, I could see it, right? Making a quick buck flipping stocks and, okay, so I was reading about this trader. It was a paper trader, a bond trader, like a short-term, bill trader. Anyways, short-term money trader, if you will, but not Forex. And this young guy, and he was in his 30s, and I think I was in my 30s at the time when I read it. This guy was making tens of millions of dollars a year. Right? And that's where I'm like, shut the back door. WTF. Because I remember how hard I was working as a VC. I wasn't making tens of millions of dollars a year. And I thought I was a pretty bright guy. And I knew a lot of bright people. But tens of millions? Tens of millions. I mean, I'm like, what the hell am I doing? Pissing around with $100 million markets, right? And then whatever. And then I read about a Forex trader, and then finally, I quit my job. I just quit my job. Being a venture capitalist, I loved it. I had a great office. I had a great routine. Everything was kind of cool, man. It was neat. I love working downtown San Francisco. Every day I would have lunch. I'd walk out to one of the piers in San Francisco, and I'd eat a sandwich, and the same seagull would fly and sit, and I would eat lunch with the seagull. And I'm like, this is so cool. And the Bay Bridge is right there. And I had all these friends that were just killing it in the high tech world. And I'm doing my finance stuff as an investor. And I was just loving it. And I threw it all the way because of Forex. Because I realized it would be very difficult to make the kind of money I was reading about. This kid my age was crushing it on Wall Street. And I'm like, wow. So at the time, Forex was $2 trillion a day. And it was such a joke because there's no freaking way. $2 trillion a day is absurd. Then I looked into it and I'm like, sure enough, $2 trillion a day was the opportunity I was looking at. And I said, really? $2 trillion a day? Maybe I should investigate. Okay? That's how it all started. Okay? That's how it all started. And pretty soon I was spending just as much time on Forex as I was doing my day job. And I just can't multitask. So I literally got to a point where I had to quit being a VC or quit being an FX. VC versus FX. VC versus FX. VC versus FX. So I walked into my boss's office. I had just been promoted to vice president of the firm. We had about 300 employees. And I walked in and I said, take this job and shove it. Threw away salary and commission, threw away health benefits and all that kind of stuff. Threw away my retirement account. Yup, threw it all away, yo. Threw it all away. Garbage can. I literally just walked out. My wife got mad. Not only did I quit my job, but I left all my stuff in my office. She's like, but you just bought new furniture for your office. And I'm like, yeah. But you left it all there. I'm like, well, I was done. You're supposed to pack up and leave. And I'm like, no, that's not how I quit. I just walk out. I'm done. I walk in. I quit. F you. And I turned around and I walked out the door. I can't stop and pick up my stuff. That's sad. They're like, what a loser, right? You're like packing your boxes. Okay, everybody, I'll miss you. Good luck with it. No, I just walked it. I'm out. I'm done. I turned around. I walked out the door. Don't look back, right? That's how you do it, isn't it? And then I get back. She's like, where's all the shit you just bought for your office? Like, it was great. I had little ornaments that matched the pictures and matched this other thing. So like I called it my idiom, right? And she's like, but you had the idiom. I'm like, yeah, well, the idiom's there. Someone else is going to have to clean it up. So anyways, yeah. So anyways, that's it. I'm out. God, smell you later, dog. I'm a Forex trader now, right? Goodbye. Yeah. No, Harvard was a million years. That was 20 years ago, bro. Anyways, pretty funny, but that's how I got here. But what I'm saying is, at that point, I knew very little, but I had been practicing for a couple of years, let's say. Practicing. Like, I was figuring it out. Like, I was just learning or just teaching myself technical analysis. But I got to a point over those 2 years where I was doing very well. Okay? I was doing very well. So I had to choose because I couldn't do both. So I either had to do very well as a venture capitalist or very well as a Forex trader, right? Because one of them needed my full time and, all that kind of stuff. And so, yeah, so I ended up being, but you have to, when I started, I knew nothing. Then when I quit my job, all I knew was technical analysis. But I didn't know why things were happening. I just knew how they kind of happened. But you also have to understand, way back then, I was just buying euro dollar every day. You understand? Like, that's it. Every day I'd buy euro dollar and make money. Why is it complicated? I didn't know enough to make it complicated. And I did come from a background of trying to make things simple. But remember, I didn't know anything. So I didn't even know enough to make it complicated. Right? Yeah, completely self-taught, Steve. So the story, and I'll probably end up just leaving it at here because many of you guys have heard the story, but I was invited to speak at the very first Forex Trading Expo. The very first one, I was a keynote speaker, which is cool because, once again, I'm self-taught. Why was I a keynote speaker if I was still that young as a trader? Well, I had already started speaking at FX Street and was developing quite a reputation. So they're like, oh my God, you need to speak at this conference in Vegas. And I'm like, well, make me a keynote speaker and I'll do it. And they're like, okay. I'm like, really? Shit, okay. Which was good because I put a lot of effort into it. But here's the thing. So I felt insecure though. Okay? I felt insecure because I'm like, dude, I'm self-taught. I don't know anything about this crap. Right? Like, I'm not a professional trader at that, and I'm not a banker. I didn't come from Goldman Sachs. I didn't have a degree in this. I wasn't a Harvard man. Like, I'm like, really? Okay, so I speak, I do my thing, and then I thought I will go check out what other people are doing. The other speakers, right? Because I'm like, well, maybe now that I'm here, maybe I can learn like what real Forex traders do. This is my thought process, right? You can see the insecurity, right? I'll go, now that I did my speech, because I was a good speaker, I'd done a lot of things in my life, so I could do it. So now let's go see what the real traders are doing. And I sat and I watched a guy do Gartley patterns. And he drew some sort of butterfly, and he said, well, if you look at this and then you look at that and you'd measure the angle from here, so this would have a certain angle and that would predict some other thing. And so I had finished mine. That's, here's what my speech said. When it came back to the 21 EMA, buy it. Buy the 5A cross when it turns up off the 21, right? And I felt like that was just too simple. Like, oh my God. And then I'm watching this guy and he's like, well, if this is 28 degrees, then this is, this other stuff. I don't even know how to draw it, right? But he was doing this stuff like, oh, the angle between these two things would change this to something else. And like, I don't know, if this was a 382, this would be 618. I don't know, whatever, right? And I'm like, holy smokes. I'm like, this is so beyond what I'm doing. I'm buying dips at support. And this guy's crazy smart, right? Here's the thing. 45 minutes into his speech, he realized he had made a mistake in the presentation. And that, right? He had just gone through step 1, step 2, step 3, step 4, step 5, step 6, step 7. Remember, I'm like, dude, buy the 5A cross off the 21. Like, mine is so simple. Hey, if the 21 is above the 55, you're a bull, right? Like, like how simple is that, right? And this guy went through the whole thing and then he realized he had made a mistake and he just stopped. He stopped. His presentation was just dead in the water. And he's like, I'm sorry, I don't really have time to go back and re-explain all of this and this, but this is wrong. And I'm like, the whole time I'm thinking, why do you need this, right? Like, again, it looks something, I don't know, like this. This is the opposite of what I drew, but he's like, if this angle is this is going to be that, and then this angle, and then that angle, and that angle, and all this. And I'm like, right? Like, I didn't understand why it needed to be so complicated, and I felt stupid. Okay? Do you understand? Like, I felt stupid. I felt dumb because I said, well, this is a higher high than this one. So I'd buy the higher low. And the tool I used very often at that time is when this moving average caught up. So I remember the whole time like, oh my God, this guy's measuring angles. What degree is this and what degree is that? And these all have to add up to 90 and therefore this has to, right? So basically you're turning that into a triangle and that's going to predict this. And I'm like, why wouldn't you just buy it here? And so, I walked away after he had made his mistake going, my way is better. My way is just better. Okay? I'm like, I like my simplicity. Right? I said, maybe I don't understand all the other stuff that the other guy was doing, but I'm glad I spoke at that conference. Because I walked away with like, okay, it's not as complicated, but it works. And that's all I know. And I never listened to another expert ever again. That was the one guy I sat there. It was a key moment in time. I'm sitting there at the big screen watching him, and then it was dead silent. It was really awkward. He's like, and he kind of walked off stage. No. He said, like, I can answer questions. And they're like, well, answer questions about what? We don't even know. Like, it was really odd. Right? Like, it was really an awkward moment. And it really hit me where I'm like, well, I don't care what these other guys do anymore because my way works and that's all I know. And it was really a key turning point where I felt good enough. Where up until that, you know, I mean, what's the bias for that? Imposter bias? I kind of had that imposter bias where I felt like I was speaking at this Forex trader conference, but I didn't manage billions of dollars. I didn't have a Harvard degree. I didn't work at Goldman Sachs. So I kind of felt like an imposter. And then I left that conference being a winner. And the same thing when I was on the Chicago Board of Trade. I didn't work there. I was invited, right? But I stood on the Chicago Board of Trade on the floor, and I watched professional traders in all these different pits, including the S&P 500, 10-year T-note. There was the options pit next to it, soybean meal and soybeans. Like, I was watching all these guys, and it was a turning point in my life. So I'm so glad to have been invited because I left. Once again, I felt like an imposter. Like, these are real traders, real floor traders. These are guys that have seats on the Chicago Board of Trade. Like, this is legit big time. And I left that day. I was so giddy. I almost feel like in my memory, my feet weren't even touching the sidewalk. I was just floating down the street because I was so happy because I knew for a fact that going in, I felt like sort of an imposter, like I'm just a retail Forex trader, right? But I came out knowing in my soul, in my bones, that I can compete against those guys and win. I hope you feel like that someday too. See you tomorrow.